Welcome to the Financial Frontiers channel, where we explore the frontier of your financial future. On this journey, we'll delve into the tenets of money management, and today we're focusing on the year ahead, 2024. It's a year that promises change and growth, but also a year that demands foresight and planning. Why is this important, you might ask? Well, in a world where economic climates are as unpredictable as the weather, having a financial plan is like carrying an umbrella. It ensures you're prepared, come rain or shine. And part of this preparation involves saving money. Saving is more than just stashing away cash. It's about making smart choices, cutting expenses, and investing wisely. It's about ensuring a secure, stable future for you and your loved ones. So, are you ready to take control of your finances? In today's video, we'll be sharing with you 10 tips that can help you save money in 2024. Our first tip for saving money in 2024 is to create a budget. Now, let's dive into the importance of establishing a budget. Picture your financial life as a ship. A budget acts as the rudder, giving you control over the direction you're headed. Without it, you're at the mercy of the winds of impulse spending, which can quickly lead you astray. By creating a budget, you get a clear picture of your income, expenses, and ultimately, where your money goes. This understanding is crucial, as it allows you to make informed decisions about your spending and helps you identify areas where you can cut back and save. So, how do you create a budget? The process is straightforward. First, calculate your monthly income. Next, list all your expenses, the necessities like rent, groceries, and utilities, as well as the extras like entertainment and eating out. Then, subtract your total expenses from your income. The goal is to have a positive number, indicating that you're living within your means. If it's negative, it's time to reassess your spending habits. Finally, allocate a portion of your income towards savings. The amount can vary based on your financial goals, but a good rule of thumb is to save at least 20% of your income. This might seem challenging at first, but with a well-structured budget, it's definitely achievable. Remember, a well-planned budget is the first step towards financial stability. The second tip is to cut down on unnecessary expenses. Now, let's delve into this. It's crucial to understand the distinction between needs and wants. Needs are the essentials, the things you can't live without, like food, shelter, and clothing. Wants, on the other hand, are things you desire but can live without. A new gaming console or that designer handbag doesn't exactly fall into the needs category, does it? Living within your means starts with recognizing and prioritizing your needs over your wants. And this isn't just about cutting back, it's about becoming more aware of where your money is going. It's about asking yourself before each purchase, do I really need this? Now, this doesn't mean you should never indulge. The occasional treat or splurge is perfectly fine, even encouraged. But the key here is moderation. For example, instead of eating out every day, why not try preparing meals at home more often? You'd be surprised at how much you can save. And remember, reducing unnecessary expenses isn't about penny pinching or self-deprivation. It's about making conscious and smart choices. It's about finding a balance between living comfortably today and securing your financial future. So start scrutinizing your expenses today. You'll be amazed at how the little things add up. It's time to trim the fat and watch your savings grow. It's not about depriving yourself, but about making smart choices. Our third tip is to focus on paying off debts. Debt, especially high-interest debt, can be likened to a financial leech, subtly draining your resources over time. It's a constant tug on your finances, a persistent obligation that often seems never-ending. But here's the thing, it doesn't have to be. Paying off your debts isn't just about freeing yourself from the chains of financial obligations. It's also one of the key avenues to saving money. Let's break it down. When you carry debt, especially high-interest debt, you're not just paying back what you owe. You're also paying a premium, the interest, which can accumulate to a significant amount over time. Imagine this. You owe $10,000 with an annual interest rate of 20%. That means, in a year, you're paying $2,000 just in interest. That's $2,000 that could have been funneled into your savings or investments. So, how do you go about it? Start by focusing on your high-interest debts first. These are the ones that are costing you the most. Once they're out of the way, you can then focus on your lower interest debts. Remember, every cent that you're not paying in interest is a cent that you're saving. It's a cent that you can use to build your wealth instead of someone else's. Prioritizing debt repayment can free up more money for your savings. Tip number 4 is to automate your savings. Now you might be asking, what does that mean? It's simple. This strategy is all about paying yourself first. Don't wait until the end of the month to see what's left over for saving. Instead, decide on a portion of your income to save and set up an automatic transfer for that amount as soon as your paycheck hits your account. Think of it this way. It's like taking a step towards financial security with every paycheck. By automating your savings, you're ensuring that a portion of your hard-earned money is going directly into your savings account. This removes the temptation to spend before you save and makes the process effortless. It's like having a diligent financial advisor working round the clock, guiding every penny to its rightful place. In essence, automating savings can help you build your nest egg without even thinking about it. Our 5th tip is to invest wisely. Investing is not just about stashing away your money and hoping for the best. It's a strategic process that requires knowledge, patience, and yes, wisdom. A wise investor doesn't merely follow trends or chase after the next big thing. Instead, they understand their financial goals, assess their risk tolerance, and make informed decisions based on thorough research. Now, the thought of investing might seem daunting, especially if you're a beginner. But don't worry, there are a variety of low-risk investments that can serve as a good starting point. For instance, consider dipping your toes in the pool of mutual funds. These are investment vehicles that pool the funds of multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. Because you're not putting all your eggs in one basket, the risk is spread out, making it a relatively safer choice for beginners. Another low-risk investment option is bonds. When you buy a bond, you're essentially lending money to a company or government for a fixed period. In return, you receive periodic interest payments and the return of your initial investment at the end of the term. Bonds are generally considered safer than stocks because they offer a fixed rate of return. One more option to consider is index funds. These are a type of mutual fund that aims to replicate the performance of a specific market index. Because they're passively managed, they often come with lower fees than actively managed funds. Plus, they provide exposure to a wide range of companies, helping to diversify your portfolio and reduce risk. Remember, investing is not a get-rich-quick scheme. It's a long-term strategy to grow your wealth gradually over time. So, take the time to educate yourself, start small, and gradually increase your investments as you gain confidence and understanding. Investing wisely can help your money grow over time. And that brings us to the end of our 5th tip. Stay tuned for more savvy money-saving tips to help you make the most of your finances in 2024. Scene script. Let's continue with the rest of our tips. Now, let's dive into the 6th tip on our list, which is buying in bulk. It might sound counterintuitive to spend more money to save money, but hear me out. When you buy items in bulk, you're essentially purchasing a larger quantity at a lower unit price. This is particularly effective for non-perishable items, such as canned goods, paper products, and cleaning supplies. However, be mindful of the shelf life of the items you're purchasing. It's a waste of money if you end up throwing away expired products, so strike a balance between the quantity and the usage. Moving on to our 7th tip, cooking at home. It's no secret that dining out or ordering takeout can be quite expensive, especially if it's a regular occurrence. By cooking at home, not only do you save money, but you also gain control over the ingredients and portions. You can make healthier meals and avoid the added sugars, salts, and fats often found in restaurant foods. Plus, cooking can be a fun and therapeutic activity. Who knows? you might discover a hidden talent or develop a new hobby. Next up, the 8th tip, using energy-efficient appliances. We're living in a time where technology and sustainability go hand in hand. Switching to energy-efficient appliances may require an upfront investment, but the long-term savings are worth it. These appliances consume less energy, reducing your utility bills over time. Plus, they're a great way to reduce your carbon footprint. So think of it as a win for your wallet and the environment. Our 9th tip is comparison shopping. In this digital age, you have the power to compare prices from different retailers at your fingertips. Whether you're buying groceries, electronics, or services, taking a few extra minutes to compare prices can save you a significant amount of money. There are plenty of apps and websites that can help you with this. Remember, every penny counts. Finally, our 10th tip, taking advantage of discounts and cashback offers. Many retailers offer discounts, coupons, and cashback incentives to attract customers. These can be a great way to save money on your purchases. Keep an eye out for these deals, especially during holiday seasons or sales events. However, it's important not to get carried away. Buy only what you need, not what you want. It's not a bargain if it's something you don't need or won't use. These tips, although simple, can lead to substantial savings when practiced consistently. Let's recap our 10 tips to save money in 2024. We started off by emphasizing the importance of budgeting, a crucial step towards financial freedom. Then, we highlighted the need to cut down on unnecessary expenses, reminding you that every penny saved is a penny earned. Following that, we discussed how paying off debts can significantly reduce financial stress and free up more of your income for savings. We also touched on the convenience of automating savings, ensuring a portion of your income goes straight into your savings account. In the second half of the video, we explored the concept of wise investing, emphasizing the potential of compound interest and diversified portfolios. Lastly, we rounded up with 5 more tips, ranging from meal planning to exploring side hustles, all aimed at boosting your savings. Remember, every little bit counts when it comes to saving money. Start implementing these tips today, and you'll be well on your way to a more secure financial future. Thank you for tuning in to the Financial Frontiers channel, and we look forward to seeing you in our next video.